We have the Nikkei markets, which are down 1.2%.
GDP better than expected.
19,555. It must not break for the up move to sustain.
This time around, the company has managed to surprise even on the margins front.
We've been able to expand margins by 168 basis points.
On the green side of the screen, that's about a 30-point jump on the Nifty that we are getting straight away.
Asian central banks may actually be in a position to cut rates.
For the coming second half, we will start to see a better number on volume.
Demand remains strong. It's continuing to outpace supply.
The Bank Nifty is struggling a bit because of the happenings in the bond market.
Last quarter, we started our third production line at the Gujarat factory.
The current year, we are expecting the total NCLT recovery of around 1,300 crore.
आज भारत दुनिया के सबसे कम कॉर्पोरेट टैक्स वाले देशों में से एक है.
The markets, it's a 72-point decline that we are seeing on the Nifty.
Well, as we begin another session here on Closing Bell, the market is posting a recovery, sharp recovery at that. Well, last hour of trade, last hour this week of trade as well. We are coming to you from the CNBC-TV18 News studios. Hello and welcome to Closing Bell. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi. Afternoon.
Hi. Looks like this last 15-minute recovery is going to save us the blushes, right?
It's talking too early. There's a whole 60 minutes ahead, and if there's one thing today has taught us is that it's narrow, but it's very choppy. It's not been a one-way journey, either up or down. So it's 60 minutes left, lots of time.
I think Reema's in character, right? I think he's going to watch Barbie today, later.
No, I'm not.
I heard you chatting with Surabhi saying that you are.
No, you're the sixth person who told me just because I'm dressed in pink, I'm going to be headed
for the movie straight after.
No.
Oh, you are? You're not?
I'm not.
You're not.
I'm
okay.
not.
Clarified.
This is just the color I was told to wear.
All right. Well, let's just take a quick look at what the market is doing, which is the fact that it is recovering. Last 60 minutes is going to be interesting. So look at this. I mean, and this is, by the way, happened in the last 10 minutes or so of trade. The Nifty intraday will, I think, tell you that. We are, for now, below the 19,620 level. This is the 61.8% retracement of the recent rise. We went below it, and then we've now recovered it. Yesterday also the same thing happened, although yesterday's low was, higher than today's low, so we've gone a little lower. But for now, we are coming back up once again. I mean, you could have thanked expiry yesterday for the sort of sharp up move we saw starting, 3 p.m., but we've got a recovery afoot here as well. The bigger one, the bigger level beyond this is the 20-day moving average, which, as of yesterday's close, stands at 19,555. Now, we've not, by the way, the market bottomed on the 31st of March this year. From the 1st of April, it started. Since then, we've not had a single close under. I think we've got two breaches intraday, whipsaws around the 20-day moving average, but we've not gone under it. And it's an important short-term sort of level, which can result in, meaningful kind of pullbacks or upsides, etc. So keep an eye out on this level. Banks and IT, they are the ones contributing to bulk of the pressure. So ICICI, HDFC, Axis from the banking space, Infi and TCS largely in the IT space. The counterbalance actually is Reliance, which is, the last I checked, adding about 10 or 15 index points. Bank Nifty, though, for now is trading below its 20-day moving average. Maybe, where are we? 45,336. The 20-day is at 45,333. So as we speak, we've clawed back above the 20-day. Again, these averages are as of yesterday's close. So, we'll need to kind of see what the 61.8, by the way, the same kind of retracement of the rise for the Nifty Bank is exactly at today's lowest point. So, you got the work cut out. A close about 20-day is ideal. And of course, the 61.8 also should be in focus. I think the small cap and mid cap part of the market has been a little mixed since the morning. Market breadth right from the word go has been more in favor of declines as opposed to advances. So fair bit to track. Lots of numbers are coming in as well. And that's the focus here over the next 60. Reema, hi.
Hi. At least the mid-caps are holding up pretty smartly, right? So this week, the Nifty sensex, it's down 0.6%, while the mid-cap index has rallied 1.2%. So we're looking at an outperformance of nearly 2%. Banks are taking it on the chin today. The Nifty banking index has underperformed this week, with a cut of 1.7%. Today, HDFC Bank is down 1.7%. This is the third consecutive session of weakness for HDFC Bank, but even others like an Axis Bank, IndusInd Bank are under pressure. Pharma is holding up in the green. In fact, this week as well, the Nifty Pharma Index is up 4.5%, with names like Dr. Reddy's, Cipla fighting for the bulls. And power has made quite the comeback. So the top two Nifty gainers today are NTPC and Power Grid. So it's a fresh 52-week high on NTPC as it rallies close to about 3.5%.
Okay, so I had some stocks cut out that we wanted to discuss that I wanted to highlight. But before we get to that, the result reactions that have come in the last 10 minutes, 10-15 minutes, they are really, really interesting. And both stocks moving down, IOC as well as Mahindra and Mahindra Financial Services. Now, IOC, the numbers seem to be in line. But I think maybe the reason that the market will look at it is I still remember BPCL's solid GRM number, which was northwards of $12 a barrel. IOC's GRMs are in line, but I think they're closer to the $8 a barrel mark. So obviously, I mean, there's no Apple, like to like, apple to apple. But in general, it's not a number that's burst past expectations, and maybe that's leading to a little bit of profit taking. Mahindra and Mahindra Financial Services, we'll get in Abhishek in just a bit. That's where the profit has missed the mark by a huge margin. Asset quality seems to be stable, but the profit is way below expectations. Yesterday it was M&M that was down 6.5%. Today it's M&M Financial Services. We'll talk more about these stocks as we go along, but just some others to talk about the outlier earnings reactions. These are two on the way down. Let me also quickly talk about the ones on the way up. And Intellect Design, look at that stock, 16% and counting. Ajanta Pharma, Green Lamb, these are the positive result reactions today. Two negative I've already mentioned. Add some more names, LG Bala, JK Lakshmi. These are stocks. So basically, stocks reacting very, very sharply to numbers. If you go beyond numbers, then there are other interesting movers and shakers. You guys were discussing power. Add in Torrent Power beyond the Nifty 50. It's a big move on that stock. Alembic from the pharma space looking good. Tata Chemicals. Quite a few stocks basically beyond the Nifty 50 where there is action going on and large price moves as well. So we'll talk about this as we go forward. But let's first up get ourselves the strategies for the last hour. Mitesh Thakkar is with us as always. Mitesh, good afternoon. So what's the sense? You were talking about some puts on the Nifty given the weakness. And you were looking, I remember when we spoke in the morning, you were looking at more weakness in the Bank Nifty as well. So are those trades still intact for you?
So I think, good afternoon. I think what is good is, the fact that on the Bank Nifty, we have had a gap down in the morning today, and we've not made any attempt to fill that. I think as long as we don't start getting past yesterday's low, which is 45,570, I think the short or the negative put rate should stand, and I would still look at 44,600 as the possible target area, giving you another 600-700 points kind of a downside from here. So maintaining a negative bias. But Nifty, I think, why it's been weak is not as weak a chart structure as compared to the Bank Nifty. So I think, while we have some problems over there, we want to trail the stop loss now to about 19,670 on this spot and see how it goes. On the stock side, though, I've got two buy calls despite the fact that both the indices have a negative outlook. Siemens is, I think, breaking out. So that's a buy with the stop at 37.90 for targets of 39.20. And Tata Power is another one that's very strong candlestick, big price volume action. So that's a buy with the stop at 228 for targets of 241.
Okay, let's get chatting about IOC, reported their Q1 numbers. Sonal joins in with the fine print. Sonal?
Thank you so much for that. Well, IOC numbers, they're largely in line with street estimates. The reason why the stock could be lower in trade is one, because it has not seen a beat on estimates like BPCL did. And secondly, refining business margins have been lower than what the street was working with. And IOC amongst the three OMCs has the highest exposure and the highest volatility when it comes to refining margins as well. To take you through the numbers, revenue absolutely in line with estimates, margins at 11.2% versus an estimate of 11%. Profits also absolutely in line with estimates at 13,750 crore rupees. Of course, on a quarter-on-quarter basis, it is an increase across all the parameters, and that is something which was expected as well. Now, GRMs have come in at $8.34 per barrel, which compares with a poll of $9.2 per barrel. So it is lower than estimates versus BPCL, which saw a beat on refining segment. Their segments, while it did well on the petroleum bit front, the segment that is, Petrochem segment has seen a sharp decline on a quarter-on-quarter basis, and this is a quarter where the spreads have actually improved, so that has come in as a disappointment as well. But is this sustainable? Looks like it's not, because now crude prices are at that $83 per barrel mark, and Jefferies in a note today suggested that earnings momentum for OMCs have turned negative with narrowed discount on Russian crude, and also this will more than offset the recent GRM improvement that we are seeing. Elevated crude price is narrowing marketing spreads. So these are a couple of things that we'll be watching out for. But for now, yeah, largely inline set of numbers with some weakness that we are seeing in the refining versus what the street was working with.
Okay, Sonal, thank you very much for that. Crude is now, by the way, at $84 per barrel. That's Brent crude prices, so at a more than 3-month high. And it's not just IOC, which is down 4%. HPCL2 is down 4.5%, and BPCL down close to about 1.5%. No wow factor in the IOC numbers. Street expectations going into the earnings season when it came to oil marketing companies were very, very high. So in that sense, there is no outperformance, no big beat. Prakash is with us on the show now. Prakash, oil marketing companies had a very good run over the last couple of months as crude prices were declining. But now that tide is turned, prices are on the rise. How would your thoughts on oil marketing companies? Is it tactical trade?
Good afternoon, Rima. So, without specifically commenting on IOC, because I have a position in this that would not allow me to talk about this. If you look at the setup on the OMCs, the large run was not just GRM improvement or strengthening in the last few months. It was actually the kind of significant marketing margins that they were sitting on also. But I don't see any kind of a let up on that. That will continue. But yes, GRMs will probably start peaking out, which means that we'll probably not expect stellar performance on the refining side. And hence, some of the companies which have higher weightages of refining, as you rightly mentioned, will get impacted. But I don't see that, the tide turning for them on the negative side. In fact, the good time could continue. You have crude going up, which means that there is definitely going to be in dollar terms, it is significantly going to be better for them, even if the margins peak out at this level. But this whole thing of a quarterly number coming through and things changing doesn't happen. The business continues on a seamless basis, right? And from that perspective, I think marketing margins are still intact. The kind of revenue generation potential all these companies sit on is significant. So my sense is that if you have a longer term view, you will get rewarded quite decently in terms of market outperformance from most of them. But you could pick and choose depending on your risk reward. But I don't see any kind of a disappointment going ahead. It could probably just be a little bit of a sentimental reset given the fact that the margins are peaking out.
Okay, all right, got that. Prakash, stay on. We have more questions for you. Before that, let's address those M&M financial numbers. We have Abhishek standing by for the first cut analysis. Abhishek, what do you make of it?
Well, the P&L looks very weak, aided by lower OPEX this time around, and still there is a massive miss on the earnings front. So the NII growth is about 5.1% YOY and a decline of 1.6% quarter-on-quarter versus our poll. It's down 3.2%, with reference to our poll. This is surprising given the fact that the hike in borrowing costs have already been over for all the NBFCs, and now they are supposed to gain on the yield side, and that has not translated into NII growth for Mahindra Finance. So other income is also down about 34-35% quarter-on-quarter. The OPEX, they have controlled the OPEX. It is down about more than 13% on a sequential basis. This has aided the operating profit growth of nearly 6% quarter-on-quarter. However, take a look at provisions. That surprised negatively given the fact that it's coming at 526 crore versus 38 lakhs that they had in the previous quarter. This is a surprising factor given the fact that asset quality has improved. Both the gross NPA ratio and the net NPA ratio have improved, and still they are making elevated provisions, which has dented the earnings momentum this time. So PAT has come in at 353 crore. We are working with a number of 512 crore. So it's a massive miss of about 31.2%. So that is what you are seeing with reference to the reaction on the stock price as well. Back to you.
Okay, got that. Thanks, Abhishek, for the details that we have right now for that analysis. Prakash Diwan is with us. Prakash, M&M Financial is selling off just as dramatically as Mahindra. Mahindra and Mahindra was selling off yesterday for other reasons. What do you make of everything that's going on? I mean, of course, the performance today and the misses that Abhishek was alluding to. And also, what is your guess on this 3.5% stake that they ended up buying in RBL Bank? It's right now, there's no commentary, I think, even in the MMFSL press release or anything like that with respect to it. What do you make of these developments?
So, Sylvie, the RBL acquisition, the 3.5%, whatever they've acquired from the open market, is probably more indicative of an intention to go down that path. They've tried doing this a few years back as well. Things didn't materialize, and Mahindra Financial was purportedly the vehicle that they would use to reach out to their target segment within the financial services space. I think it's more of an opportunistic buying that they've done. If things go well, if they get the regulatory approvals, there could be some sort of an interest to to grow that book much largely from where they stand. So at the end of the day, an NBFC and a bank, there's a huge difference. And we always are given to understand that corporates in India are not looked at very favorably in terms of being able to go ahead with a banking license so easily, unless there is very clear intent and content that's been established. But my sense is this will probably not go further very soon. It will take a long time, and it'll give us enough time to react. But the capital allocation doubt that that surfaced after that announcement was made is something which M&M has had in the past as well. They've tried doing that, but remember, they are the only Indian MNC, true-blooded MNC, which is trying to expand. But they've done some very smart moves in terms of capital allocation, getting out of businesses as well, right? So I think it was a bit overdone, and that's what probably the market is now reacting to today. On the M&M financial numbers, I just want to say NBFCs have to face the reality of a very large new player which has the potential to disrupt the market in many ways more than one. And that means that your performance cannot be just pedestrian. You will have to start scaling up. And if on a sequential basis, these numbers don't give that kind of a confidence, to be honest, for a good company like M&M Financial. So we've seen the way L&T Finance kept on struggling for so many years. Of course, barring this recent move where the change of management probably was a catalyst for some sort of a revival of interest. But in terms of performance, some of these NBFCs which have not been able to be like the Cholas or the Shrirams of the world will face a lot of competitive intensity, which means that it's going to get difficult to retain margins and to grow the book. So I think it's more of a reset on that. Earnings become an excuse or a trigger to relook at some of the allocations that you have. So once the Jio Financial Services thing is available for people to allocate and see their growth, I think things will be very different for most NBFCs in this genre.
Okay, well, thanks very much, Prakash, for that. Stay with us. We're just coming back. I just want to highlight two stocks. One is Sundaram Brake Lining. If you can have the stock up, that Sundaram Brake Lining, the stock's at about 432. I think there is an AGM today on this one, for this one. And reportedly there is some turnaround in profitability, etc. Stocks spiking. And then look at Sundaram Holdings. That is the other one. That's about 120 rupees. That is seeing a large move higher of about 17, 18 odd rupees or so. I think that's the holding company, which is kind of reacting in a much more significant kind of a way. And volumes on the holding company, some of the largest that I think, one will have to go back a long time to get volumes around these levels, at least a year and a half or so in terms of the volume. Those are the two names. I just wanted to quickly highlight that. But we'll take a quick break here. Dinshaw Irani of Helios India will be joining us on the other side. Stay with us. Lots happening right here.
Welcome back. Holding above 19,600. Let's quickly run you through some of the big movers, and one of them has been Intellect Design Arena. This is a product company. It caters to the banking sector, largely the global banks. So it's not a services company, the typical IT services company. And they reported their Q1 numbers yesterday, very strong, which is why the stock is up 16%, snapped a 7-day losing streak. This is the best one-day performance, one-day gain for the stock in more than 2 months. And I think it's added more than 1,000 crore in terms of market capitalization. The numbers then. Revenue growth at 18% on a year-on-year basis. Margins for the company have expanded to 23.1%, and the gross margins for the company have been inching up. They've gone up on a year-on-year basis, but look at the improvement over the last couple of quarters. 3 quarters back, the gross margins for the company were at 52%, and now they've come almost to their 57% mark. Profits have gone up 36%. Other internals like collections have shot up sharply on a quarter-on-quarter basis. The deal pipeline has been going up. A year back, the deal pipeline for the company was about 5,500, 6,000, and now it's well above 7,000. The average deal size for the company too has gone up. So it's a strong set of numbers from Intellect Design Arena, only that in the past the numbers have been a bit volatile. Prakash Diwan is with us on the show. Prakash, in the past, Intellect Design Arena, for many of the investors, hasn't made money. People have they've lost money, and the numbers have been a bit volatile. But Q1 numbers are very strong. They've come up with their product, eMac.ai. The company sounds very bullish about that. Do you like Intellect Design Arena, and do you think it could have a couple of good quarters on the trot, which could make investors some money?
Yes, Niba. It does look, not just the numbers, which evidence turnaround in the kind of trajectory that the company is got. But as you rightly said, the comments on the management do make you believe that this is likely to be a stronger trend going forward. And within the overall BFSI space, they have a very clear mission-critical suite of products, which cannot be overlooked by anybody who's probably looking at or re-looking at budgets and things like that. So this is not just a services angle which you could defer, reset, and replan around the timelines. But here you would need these to critically run your business even in tough times. So I think the contribution from a lot of the investments that they've been making over the last 12, 18 months has started paying off. So that is something which is likely to still bear fruit for at least a year plus for sure. And that will only make the position stronger. You look at a Cyient, you look at a Axelia Kali, these are niche areas which have helped most companies deliver decent performance irrespective of what's happening to the overall IT environment or IT spending within that environment. So I think definitely Intellect it does have that kind of a wherewithal to be good. This is a catch-up rally. It hasn't done much for a lot of investors who've been holding on. And I see a lot of faith that a lot of investors have in that stock every time it comes up for discussion. So it's something which is in good hands in that sense from a longer-term perspective with most investors. And they would probably be willing to hold it hold on to it till the actual benefits of all that expansion, all that investments will start bearing fruit on the price as well.
Got it. We'll leave it there. Prakash, thank you very much for your time. Great speaking with you here on CNBC-TV18. Well, it's really buzzing out there in terms of the number of stocks which are really up and down and all over the place. Look at Supreme Industries. That's the one. 9% cut. But I think, some of this stuff you also have to look at in the context of the outperformance or the rally that these stocks have seen. And Supreme went up non-stop. I mean, small gains, 2%, 3%, but non-stop for, I think, a couple of weeks at least. So even accounting for this 9% kind of a pop, the stock is still up some 35, 36% for the year. And of course, bulk of these gains have come. The low in January was 1,600. Stocks basically more than doubled since then. And of course, for the close, as I said, it's done about 35, 36% or so. So some of these moves are just quite amazing. Supreme, by the way, just reported numbers. I think we had the management with us as well, and we'll play a soundbite out for you in a bit. Numbers are not bad. I think volume growth is healthy.
36% volume growth.
36%, right? That's massive. But I think realizations are perhaps a little under pressure. But that's a commodity business you're talking about in that sense. So that is Supreme for you, which is selling off right now. But there are so many others. Let's bring in Dinshaw Irani, Chief Investment Officer at Helios India. Dinshaw, good to have you with us here. Good afternoon. Appreciate your time. Just to use Supreme as an example, Dinshaw, some of these stocks, I mean, you never imagine something which you own, especially which you own, and which is going up 35, 40, 50%, that you will see sharp reversals, right? But it's only but natural at some point. Just a quick comment on the kind of earnings that we are seeing, because we are, by the way, I counted the number of earnings we've had. I think about 82 companies out of NSE 200 companies have reported. I can tell you, and I'll put out a piece later, there are more downgrades to full year estimates as compared to upgrades that we have seen. So, your thoughts?
Prashant, thank you for having me on your show, and a very good afternoon to you and your viewers. Actually, Prashant, the earnings front, we always felt there's going to be a mixed bag. I mean, even the ones which have reported thus far, they've been pockets of solid outperformance, financials being one. And I think that there it's a structural story which is being played out, and we don't see any problems in that space, at least for the next couple of years, in fact, not even quarters per se. But there are definite pockets of disappointment, IT being one, which was a total glaring one as such. Infosys cutting down their forward guidance of 4-7 band to 1-3 band, which was like I don't think they've ever done such a drastic cut in one quarter. So that just shows you the weakness in that sector as such. Pains being another one. So there are a few pockets which are really showing weakness. Consumption space again, there was expected to be weakness, but there have been fairly weak results coming into this quarter. So I think it's fairly a mixed bag, but more towards the losing side than anything. And I think you're already seeing that that effect on the markets as such. I mean, you talked about a few stocks which have seen a sharp correction after their results per se. I think the expectations were a bit too much in these kind of counters, and probably that is what is coming to fruition right now.
Well, I remember the Dinshaw. Hi, good afternoon, Surabhi. I remember IT, in any case, you were very circumspect on. So I guess that's a call that's gone spot on. So congratulations on that one. You were steering clear. Let's talk about a different sector. We haven't usually I think, discussed this with you in the recent past. And I'm talking about power. Today, there's a huge move in a lot of these stocks. Not sure if you have any interest here, if you're looking at it. If not power, then anything else in related industrials?
So actually, power is something that we've never touched before. I mean, you've been interviewing us for a very long time, and you know that these kind of plays are something. Cyclicality is something which we avoid totally. I mean, when we look at a sector, we want these multi-year tailwinds to work out in this case. But in the case of power, particularly, one, ESG non-compliant. Secondly, there's a lot of green being talked about, so there's no way we can look at this sector. But however, I mean, since you touched upon that subject as such, probably infrastructure
industrials,
is
that's why. That's why, Dinshaw, I said I broadened it to industrials, because I know that you guys have never really, cared much for power. Because that's a part of the market that's actually worked very well. Whether you're looking at defense or you're looking at some of these railway tendering companies, there's been tremendous wealth creation over there.
Yeah, no doubt about that. In fact, defense, one of the big players came out with results recently, and it's been a very good number from their side. In fact, they've done very well after that also. I mean, you've seen the price movement here as such. So that continues to be one of our strong fortes. But we're looking at capex plays also, where we have one single name as such, but we're very careful in that space because the valuations are pretty stretched there. So we're being very, I would say, careful in selecting names there.
Dinshaw, where do you stand on pharmaceutical sector? It's done pretty well. I was looking at the performance of Nifty Pharma versus the Nifty over the last 3 years, before COVID. The Nifty Pharma has outperformed the Nifty. The Nifty Pharma index is up 160%, from the time COVID started, while the Nifty is up 120% from that period. So the Nifty Pharma index has outperformed over a 3-year period so far this year on a year-to-date basis. But the numbers have started picking up, and there is that outperformance. There are upgrades finally coming through in pharma sector. Where do you stand on it?
So, Reema, this particular quarter was the one where we really saw a surge in numbers per se, but our feel is it's more of inventory stocking which is happening in the US. We're more keen on looking at India-specific names rather than those who are more dependent on overseas filings as such. And actually, if you I don't know, picked up this particular data point, K6 filing by one of the big pharma companies in the US. I mean, India pharma companies which operates in the US. They did the K6 filing yesterday, and there it was obvious that though they've seen a volume growth, but the price erosion continues. So that's what is holding us back in these specific pharma names. So we don't believe that this rally will continue. That's why we're avoiding these US-centric names and looking at more India-specific, where again the valuations is pretty straight. So we have to be very careful here too.
No, absolutely. Got that, Dinshaw. Just by the way, we had the management of Dr. Lal with us earlier. That's pharma. It's of course much more bombed out than pharma. Pharma has still done very well. I mean, the pharma index is up some 30% over the last 3 or 3.5 months. But this space, Lal Path Labs and Metropolis, any thoughts? Have you thought about owning any of them? Good franchise, but has been under pressure for some time.
Prashant, the fact that you use bombed out space, that itself showed that we've earned by not owning them. So that way. But anyway, having said that, in fact, this particular name that he took, I think again the problem is that though they showed a margin growth in that particular quarter, but actually the re-rating for this sector has happened because of volume growth rather than margin expansion. And again, if you listen to the con call, I mean, they were very clear that the margins will come back to normal as such. And frankly, I mean, there's lots of disruption in this space, not only on the pricing front, but also on the fact that, I mean, as I've been stating it earlier, there are these new devices which are available, which is making this space, I mean, more and more tests non-viable for them as such. So that's why it's avoidable. I mean, wherever disruption is there, we'd rather be very careful in that space as such. And actually, it's obvious. I mean, in fact, the name that you took, they also talked about capex is being cut off. The OPEX will go up because they're looking at more advertising to get footfalls in and stuff like that. So it's obvious that there's a struggle going on in that space. So we won't be owning any stock in that space.
Okay, got that. Then, Shaw, finally, leave us with any new ideas? Anything else that's creeping on your horizon, or are you simply all the incremental money is going in the same names that you have?
No, not really. So there is. I mean, obviously, we always are lookout for ideas within our portfolio also. But the fact is that certain spaces, I mean, we've been cutting off some weightages. I mean, consumption was one space where we have reduced some weight as such because, as I said, that has been disappointment creeping in as such. But we always look out for ideas. Having said that, I think I'll leave it there because I don't want to touch upon any going forward as such.
Okay, well, then, Shaw, we have more questions, but not enough time, as always. So, we'll leave it for the next time. Thank you very much for joining us. It's always a pleasure having you with us here on CNBC-TV18. Well, I think just past 3, the market's trying to come back into the green. So, 12 points and 19,643 is where we are at. Just put the Nifty up and you'll see the sharp move higher that we've seen from the low point of the day. And I think a lot of the move has come in after 240 or so was the day's low. And from there on, a very good bounce. We slip into that break. We are back. A quick reminder on a programming note, our weekend special editors roundtable comes up at 4:30. So here's a quick sneak preview of the themes that we will touch upon today. Government offloading stake in RVNL. Will we see the government booking profits in other large or small public sector companies as well? The PSU pack has done very, very well. Opportune time, will the government monetize? That's the question my colleague Nimesh will put up and discuss on the program.
The pharma stocks have made a huge comeback this week. However, a closer look at the internals suggests that this could actually be just the beginning of a much larger move. Anuj will be bringing us the details on this.
Okay, and finally, I will take a look at stocks which have seen the biggest earnings upgrades and earnings downgrades as we approach the halfway mark in this particular earnings season. Well, so don't forget to tune in to Editors Roundtable at 4:30 p.m. later today.
almost positive, then 3 points negative. It's been all over the place today, really. But at least we've managed to recover very, very sharply from the lows. And those lows were threatening to go all the way to the 20 DMA. So it's been a good pullback. We've got Nimesh joining in with all the chatter and the buzz from dealing rooms today. Nimesh, so what have you made of it, and what have you been hearing on all the earnings, the volatility today?
As you rightly pointed out, a good pullback from the lows in today's trade. But again, it's been consolidating in a very narrow range. I guess the start to the new series has been quite good, largely because the broader markets are doing well. And within broader markets, there are a lot of sectors and stocks which are buzzing in trades today. For example, the entire real estate basket has been buzzing in trade today. Big moves in that space as well. And so is the case with the power PSU stocks as well. So even those stocks are doing good today. On the flip side, some bit of profit booking in the pharma names, and also some bit of profit booking in the OMCs as well. I guess with regards to OMCs, I believe the numbers have not gone down well with the street, and hence you're seeing some sharp reaction in the OMC names. But broadly, the feedback is that the flows still continue to be on the positive side. And I guess there are two things which will dominate the August series. One, of course, the fag end of the earnings season, which might disappoint in some names, so that's something to track. And also there is an MSCI and FTSE rebalancing middle of the month, which will have an impact in terms of flows as well. So liquidity event is something to track, but I guess earnings is going to dominate, at least in the first half of the August series.
What about stocks, Nimesh? What do you have on your radar?
Well, in terms of individual names, the first stock on my list is Sterling and Wilson. Big move in that stock for the last couple of days now. Even in today's trade, the stock is buzzing on good volumes. I believe clutch of HNI investors have turned active buyers, and hence you've seen a big move in that stock off late. So that's the first one. The second stock is NCC. Again, out of the earnings, that stock is buzzing in trade. Good volumes as well. I believe the street is anticipating a large order win for NCC very soon, and hence a big move in that stock as well in today's trade. So that's the second one. The third stock is Escorts. Again, Escorts is buzzing in trade for the last couple of days. Big move today as well out of the earnings. I believe the street is anticipating a beat in earnings, but beyond that, I guess the street is also expecting some corporate development in Escorts very soon, and hence a big up move there. And the last stock is Spandana. This has come into my list a couple of times in the last few weeks. Now I guess the indication is that the book is getting built for a large block. Remember, the ex-promoter has been a willing seller for the last many months. That's been the strong buzz as well. So looks like that block can happen very soon in Spandana Spooty.
All right, Mitesh. Nimesh, thanks very much for that. Appreciate it. I mean, interesting list of stocks as always, and we'll keep an eye. Mitesh is with us now to tell us what to buy or sell today for a reverse trade when we come back on Monday. Mitesh, what do you have?
Prashant, the market has made a good recovery, and in a very surprising manner. I think we didn't see follow through to levels of 19,500 level. But on the stock side, we had earlier buy calls. Even now, I have two BTST calls. ABFRL is a BTST with a stop at 220 for targets of 227. And Apollo Hospital also making a new swing high. That's the BTST with a stop below 5,300 for targets of 54.25.
Okay, thank you very much for that. Let's shift our attention then to the earnings corner. We're going to quickly tell you what are the key earnings to track today and for the next week. So on Monday, that's the 31st of July, the big names to watch out for are Maruti Suzuki, UPL, Power Grid. On Tuesday, 1st of August, we will be tracking numbers from PVR, Inox, Escorts, Kubota and Adani Total Gas. On Wednesday, 2nd of August, Gujarat Gas, Titan, Gujarat Properties will be reporting the Q1 numbers. And finally, on Friday, the 4th, we will be waiting for numbers from Bharat Dynamics and M&M. But for the day, in the evening, it's Marico, which will be reporting numbers, and Mangalam joins in with the expectations. Mangalam, the stock is up 3.5%.
Yes, the stock is up 3.5% today. It was up around 3% yesterday as well. So Marico's been up around 6-7% going into numbers. And this at a time when the street already knows of most of the numbers of the company. This is with regards to their revenues, the volumes, as well as the operational performance as well. The company had given the street a cheat sheet which wasn't accepted well by the street. That was because they said that there was anticipated pickup in rural demand which was not visible. At the same time, signs of quarter-on-quarter improvement not clearly visible in terms of consumer sentiment as well. As a result of which, the consolidated sales in their quarter declined in low single digits. Domestic volumes also grew in low single digits. A large part of the price correction came in on account of Saffola. However, all of that did not mean much for the operating margin. In fact, the operating margin has seen a much bigger expansion, and the net profit growth would be double-digit itself. As a result of which, the streets put together those numbers. We're expecting a 2.5% decline on the top line. We're looking at a number of close to 2,500 crores. The EBITDA likely to expand by 10%. That means a margin expansion of nearly 300 basis points. And at the same time, the net profit grows by about 10%. You're looking at a number of 416 crores. What does the street anticipate in terms of volumes? Domestic volume growth seen between 2 to 3%. Of course, this is on account of low double-digit volume growth in Saffola and minor volume drop in Parachute. Important to watch out for commentary going forward, but most important to watch out for what they have to say in terms of all the acquisitions that they've made. Just yesterday, they went ahead and bought a 58% stake in Plix.
Oh, yeah, absolutely, Mangalam. That, in fact, is the point of interest for me as well, because on the core business, they've been talking about low rural uptake and things like that, even in their first quarter update. But yeah, getting into newer areas like Plix. Well, with that, let's quickly move on to Maruti, because that's the number that we'll watch out for on Monday. Sonia's here with the key expectations. Sonia?
Well, thanks a lot for that. You know, it's expected to be a very good set of numbers for Maruti. So let me run you through the key numbers. A revenue growth of almost 20% is what we're looking at on a year-on-year basis. The EBITDA is expected to go up by almost 70% on a year-on-year basis. Margins will improve to 10.3% versus 7.2%, and the profits will more than double. Now, yes, there was a low base of last year, so the numbers are looking very strong. But even if you just look at what happened in this quarter, the volume growth that we saw was about 6% year-on-year, coming in at a little under 5 lakh units, but there was a good price appreciation because of the price hikes that the companies took. So the average selling price went up, by about 12% year on year, and that also was aided by a richer product mix, so higher number of SUVs that were sold this time, and that aided the overall margins for the company. Apart from that, if you look at it on a sequential basis, then the margins could decline by about 20 basis points quarter on quarter because of a slight decline in volumes compared to last quarter, higher discounts that the company had to offer, and higher advertisements that they had to offer on account of the new launches. So a little bit of a downtick on a quarter-on-quarter basis. However, there are some risk factors which include signs of demand moderation, especially in the the affordable segment, the lower segment of cars, and that's something that the Maruti management has also referred to. So that's something we'll await in terms of the management commentary. But otherwise, the Q1 number is expected to be quite strong on the back of a low base and a pickup in volumes. Back to you.
Okay, all right, got that, Sonia. Thank you very much for that. Sudeep Bandyopadhyay is joining in now in the last leg of the show. Sudeep, thank you for being with us. So since we are, talking about some of these auto stocks, what's your sense? Bajaj reported numbers. What did you think of it? I mean, of course, there is Mahindra and Mahindra, which has been in the headlines for things beyond its auto business. Any thoughts on some of these names?
Well, I think we do like Mahindra and Mahindra, and we've been recommending it for quite some time. I think almost 1 year. It has given good returns to the investors as well. But this announcement of acquiring stake in RBL is kind of baffling. I will expect them to explain the rationale and the logic. There is always a logic that, it's a good investment. It will have a capital appreciation going forward. But that doesn't cut really, because they have been talking about proper capital allocation. They were getting out of unrelated investments. And, under that scenario, suddenly making this investment is a bit of a dampener. But otherwise, Mahindra was our favorite. I think they were ticking all the right boxes. Apart from Mahindra, we do like Maruti as far as the four-wheelers are concerned. As Sonia was just mentioning, there has been a demand pickup and the volumes have gone up. The margins also, leave aside quarter on quarter, but otherwise they have taken the price hikes and things have been working in their favor. We'll have to, of course, watch for the commentary which the management makes on the demand scenario as far as mid-sized cars and things like that. But by and large, if you take a 1 year kind of a view, Maruti and Mahindra both looks good. But as far as Mahindra is concerned, I'll hold my view for the time being till I hear the rationale for RBL stake acquisition.
Okay, the other one has been something like a Supreme Industries, which is selling off hard. Any thoughts on that one? That also reported numbers an hour and a half back. Sudeep.
Well, I think, Prashant, this is a commodity play. And, in the commodity play, the way the price had gone up and all that, there was a question of profit booking. And I think pretty much that's what is happening. The management, the volume has grown by 36% and all that. But is it maintainable, 36% growth quarter on quarter? I doubt. And, somehow I did listen to the management interview, which you guys did. wasn't very impressive. And I'll not really like to buy this stock at this stage. There are many other interesting sectors and stocks which rather one investor should look at.
Okay, just put up two names. One is, if you can, we'll take a break actually, but before that, Thangamile Jewelers, right? That's the South-based jeweler. 13% gain. I mean, the numbers came out, I think, 4 or 5 days back. We had the management with us as well. The stock is up 50, I think now it's up 55% maybe this week. So it's just an incredible re-rating on this one, Thangamile, and huge volumes. I mean, so nothing to scoff at. And the other one is Shakti Pumps. They make solar pumps, agri pumps, and Shakti Pumps is up 10%, 740 on that one. So, a lot of movers that I can spot. Advanced enzymes, there is Parag Milk. These dairy companies have had a very good week. Not just Parag, but names like Dodla Dairy and others as well. Senco, which is the Kolkata-based jeweler, which listed, and one of the few listings which, by the way, has not done very well. Senco is up about 7-8% or so. So while the market is not doing very much, you got many companies in the mid and small cap part of the market which are surging. We'll take a break here. Sudeep, of course, is with us. We'll go back to him, and of course, there's 10 minutes to close. Stay with us.
Welcome back. You're with us, and we are down to the last 5 minutes of trade today and for this week. Sudeep, so give us some ideas. Anything that's crept up on your radar? You know, we were just discussing in break the rise and rise of, for instance, a Thangamile jewelry. You know, anything that's really stood out for you across the mid-cap and micro-cap universe?
A couple of things I think one can look at. One is, of course, Prashant referred to Senco Jewelers still doing well on listing. Absolutely correct. But I think it's got same features as a Kalyan had, let's say, a few years back. So I'll very carefully watch Senco, and maybe it's not a bad idea to take some position in that stock at this stage, considering our propensity to buy gold jewelry, India as a whole, there are very few listed stocks available. We have seen, of course, Titan has been our all-time favorite. Kalyan also we like with what they are doing, the kind of numbers they are coming up with. We will watch Senco very, very carefully. Thangamile, unfortunately, not sure and have not been tracking that, but probably we need to start doing that soon. Apart from that, I think BFSI has been our favorite sector, and there we do like Federal Bank. I did see the interview of the MD yesterday on your channel. He was very clear. And apart from that, I think they're trying to do all the right things. They tick all the boxes. The bank is definitely on a strong growth path, and the valuation still looks attractive. I think that's one other stock on the BFSI space which I would recommend buying.
What about Indian Hotels? Came out with their numbers. Looks good. 15% top line growth, 30% bottom line growth. Would you buy it at current levels?
Rima, which stock you mentioned?
Indian Hotels. Indian Hotels.
No, it's a fantastic story. I think the hotel industry overall has been doing very well. Indian Hotels, I think, the margin was a bit of a challenge. Other than that, the numbers were pretty impressive. If I'm a long-term investor, I'm looking at a long-term, which is 1 year plus, there's absolutely no problem buying Indian Hotels at current levels. They may not give you a fantastic return in the very short term, but 1 year hold, I think Indian Hotels at current level also is a good buy.
Okay. All right, Sudeep, we will leave it on that note then for today, and we leave you to enjoy your weekend as well. Thank you very much for joining us on the show. And with that, it's time to start recounting what has been an extremely volatile day. But the silver lining for the bulls is that we have recovered very, very smartly from the lows. In fact, just to mention specifically, the low of the day for the Nifty, that is, was as low as 19,563. So we practically went down to the 20 DMA, but then bounced from there and are all set to end actually even above yesterday's low. So again, that's a slight bullish indicator. Power was the lead sector right from the front. NTPC Power Grid doing very well. The other names included Dr. Reddy's, JSW Steel. These are some of the key movers. By the way, a lot of auto stocks, particularly two-wheelers, they saw plenty of buying. Hero Moto, Bajaj Auto, even Eicher gains between 0.5% to about 1%. M&M managed a bit of recovery for itself with a gain of about 1.5%. But I guess banks, very clearly, folks, the banks are a trouble spot for this market. Bank Nifty is ending with a cut of about 0.5% with all the heavies. HDFC Bank was actually dragging the entire session. It wasn't even volatile. It was just down. And that's one thing that kind of stands out, at least for me, in terms of key takeaways from this week. The weakness in banks.
Everyone was hoping that HDFC Bank will start outperforming once all the merger was done. So sometime in early July, a lot of folks were saying that maybe it's now time for HDFC Bank to shine, but that really hasn't played out. Today, perhaps the only leadership stock would have been Reliance Industries, as it ends with a gain of 1%. All the other large leadership kind of stocks like HDFC Bank, L&T, ITC, all of them had a fairly feeble performance. On the mid-cap end of trade, you had strength in Intellect Design arena, locked in an upper circuit of about 20%. Pharma names, whether it's Alembic Pharma, Ajanta Pharma, Ipcol Laboratories, did pretty well. So there was strength over there. You also had green on the screen on Marico ahead of numbers, and Escorts Kubota saw buying. On the losing side, M&M Financial, HPCL sold off post its numbers. Samvardhan, Motherson Sumi saw weakness as the street is concerned, where the Volkswagen's volume guidance cut is going to hurt Samvardhan Motherson. So that's another stock weak in trade. And Exide ends down 1.7% post their Q1 numbers.
I mean, it's a really buzzing screen. I can go on and on. I'm just looking at some of these stocks, and I think we've discussed maybe 50% of it. Sudarshan Chemicals. Just going down the list, I mean, in terms of, I was mentioning Dodla. Dodla was up 6%. I mentioned Parag Milk earlier. Dollar Industries, the Innovay company. Zodiac Clothing, 8%. I mentioned Sundaram Holdings earlier. It closes about 20% higher. Utkarsh Small Finance Bank. We discussed Sterling and Wilson. I think Sudeep mentioned that earlier. SKF India was up 5%. IRB ends about 5% higher. And on and on. I mean, Vesuvius, the fabulous week actually. I think the stock this week is up 23-25% or so. So it's really quite something. By the way, even on the Nifty and the Bank Nifty, we've managed to defend the 20-day moving average. There was a bit of a scare at one point, especially on the Nifty Bank. But we've managed to close, I think, both those indices above the important averages, and of course above the retracement levels that we pointed out as well. So it's not a bad close given how things were looking mid-afternoon or so. So 19,636 on the index is the final closing price. Well, I think that brings us to a wrap on this edition of Closing Bell. From all of us here, Surabhi, Rima, me, it's goodbye. Thanks for watching, but don't go anywhere. Our Friday special market Smart Money comes up next. Stay tuned for that.